Welcome back to the channel everyone. Today I want to talk about how Melvin Capital is about to be liquidated. This video will show you just how close we are not only to the market crash but also to the AMC squeeze. So stay tuned and let's make some money. And now I want to dive straight in with the key information. So, the hedge fund that lost 53% in January 2021 betting against GameStop bought $1.3 billion of Facebook stock in the fourth quarter. Now you might say, well Tom, why is that a bad thing? Facebook is a brilliant company. Well, Facebook finished the day yesterday down 26% and is down even more in the pre-market today. This is also not the only losing investment that Melvin Capital has had over the last few days. But first, let's do a bit of a recap on Melvin Capital and Gabe Plotkin and figure out how they got to this position in the first place. So obviously at one point Melvin Capital was down around 70% on its GameStop trade. It closed January of 2021 down 53%. Now Melvin Capital for the full year of 2021 posted a loss of around 39%. So they managed to recoup some of their loss from GameStop but still ended the full 2021 year down significantly. And then on top of that, Melvin Capital also had a very rocky start to 2022, losing around $1 billion in 3 weeks to start 2022. Now obviously that was around 3 weeks through January, and the market has only continued to somewhat stay stationary and if not fall even more. And therefore it's likely that Melvin Capital is now down even more than that $1 billion. And now over the last few days, Melvin Capital has had some absolutely terrible results. They hold a large position in Facebook, which yesterday was down around 26%. They also hold a large position in Square, down around 19%, and also a large position in Snapchat, down around 22%. You can see here Snap is their 4th largest position, Meta Platforms or Facebook is their 12th largest position, and Square is their 18th largest position. And therefore this is a massive chunk of the Melvin Capital portfolio that's getting absolutely torn to pieces and is down over 20% on the day. Not down over 20% on the year, down over 20% on the day. Having a quick look at the Facebook chart, we can see yesterday Facebook fell drastically. This is it down here after a massive drop. Facebook hasn't seen levels this low since July of 2020. Not July of 2021, July of 2020. So in one singular day, Facebook erased around a year and a half worth of gains. Now guys, most of you probably don't have a lot of confidence in the stock market at the moment. There seems to be massive amounts of market manipulation and market fraud that's been going entirely unpunished. And that's why I personally have been investing in crypto, especially on this big dip. With BlockFi, not only can you invest in crypto, but you can also get up to $250 in free Bitcoin just for signing up using the link in the description below and making your first deposit. With BlockFi, not only can you just invest in crypto, but you can also make your money work for you and earn up to 8.25% interest on your investments. BlockFi also has a rewards credit card with an introductory rate of 3.5% cashback on your purchases, also paid in crypto. There's also no annual fees and no foreign transaction fees, but unfortunately the card is only available in the US at the moment and not in the UK. And guys, when you've generated a massive profit on your investment, instead of having to sell off your crypto and potentially missing out on the next run up and recognizing all of those gains for tax purposes, with BlockFi, you can take out a crypto-backed loan. That way you can get cash to meet your day-to-day expenditure without having to sell off your crypto. Now you might say, Tom, how on earth is Gabe Plotkin and Melvin Capital staying afloat? How on earth haven't they been margin called already? And it's because Gabe Plotkin is raising cash for a new long-only fund. The only way Gabe Plotkin has been able to avoid this liquidation is because he's been raising money. He managed to raise $2 billion back in 2021 from Citadel back in January. He managed to raise money from other investors in 2021 as well, and now he's trying to open a new fund to raise even more money. But obviously the only rock in his plan is that he's not making his investors money, he's actually losing them money. And therefore he's very quickly going to run out of people that are willing to lend him money, and everyone is going going to want to withdraw from his fund. There's only so many times that Gabe can go into the market and say, guys, please can I borrow $1 billion? And then come back a week later and say, sorry guys, I lost it. Please can I borrow another $1 billion? It won't happen again. And then he comes back a few weeks later. Oh, sorry guys, lost that $1 billion as well. I promise this time I won't lose your next $1 billion. There's only so many times he can do this before his current investors withdraw from his fund and he ends up being liquidated. And potentially ends up being found dead a few days after, as he'll have lost some very, very wealthy people, billions and billions of dollars. It's like finding out that your girlfriend or boyfriend has cheated on you, so you give them one final chance, but then find out a few days later that they've gone and done it again. So you give them another chance, but then find out a little while later that they've cheated on you another time. You give them another chance, and they do it again. There's only so many times that they can cheat on you before you get fed up and just get rid of them. And this is why Melvin Capital is so close to being liquidated and causing the market crash, and also causing the AMC and GameStop squeeze. So far, Gabe has managed to escape this famed liquidation, but I think he can only escape it for so long before investors want to withdraw their money or before he loses it all. And I think something that shows just how close to the market crash we really are is framed excellently by Parik Patel. He says nothing to see here, just a $40 billion mega company being pumped and dumped like a penny stock. Obviously yesterday Snap was down around 23% on the day, but in the aftermarket yesterday it was up 54%. But it's not only Snapchat. We can also see Amazon up around 13% in the pre-market this morning. Typically you see Amazon up 0.5% or down 0.5%, and on a big day it may be up 1% or even up 2%. But to show just how volatile the current market really is, at the moment Amazon is up 13% in the pre-market. At the moment, blue chip stocks like Amazon, Apple, Google, Facebook and many others are more volatile than Bitcoin and other cryptocurrencies. This proves just how absolutely ridiculous the current stock market really is, and how it's currently trading on a knife's edge and could go either way. But at least the Department of Justice is doing their job, as they've expanded their investigation into short selling abuse, now up to 60 different firms, with a focus on activist short sellers, aka market manipulators. And as Rizzo Stonk says, aka Citadel, why doesn't the Treasury just come out and announce it? They want to get rid of bad actors post-market correction and want to remodel the financial markets where one entity can't take them hostage and roll with the corruption. Now you may have seen that Charles Gasparino supposedly confirmed that Citadel Securities, nor its associated hedge fund, is on the Department of Justice list of 60 firms targeted. Now obviously, as Trey says, Charles didn't really provide any source whatsoever, just a bit of trust me bro, but also the average ape added, saying the entire list hasn't been fully disclosed. And therefore, even though the Department of Justice have expanded their search or their investigation into 60 different firms, they still aren't finished and will be adding to this list as well. Now, just in case you thought this was too good to be true, there's something very coincidental that's just happened. The Department of Justice recently announced their investigation into short selling abuse, and an off-site document storage facility in Chicago has just burnt down. And guess who the facility is connected to? TD Ameritrade. A lot of TD Ameritrade's records were stored at that facility, and it wouldn't surprise me if Citadel also had records stored at that facility as well, considering it's based just outside Chicago. Now, if that isn't a very coincidental way to cover up massive amounts of market manipulation, I don't know what is. The Department of Justice asked for access to your records, so what do? You just burn them down and set fire to the entire warehouse. Guys, be sure to let me know down in the comments below what you think about the potential Melvin Capital liquidation and how close you think it really is. And as always guys, if you enjoyed this video, be sure to check out some of my others. Alternatively, subscribe to the channel and ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.